hear out Sakir Nasibe, Head of Investments at Hermes Fund Managers, on his expectations from Asian equities in 2012 and where India stands in that.
I think there'll be a rally, but it won't be as pronounced as people anticipate. With a 25% drop, you expect that to be a rally. Unless I've completely misjudged what's going to happen in the developed markets, particularly in the allocation of capital, you will see some assets being allocated back to emerging markets. And that is enough to sustain a reasonable rally. Not a 25% rally, but a reasonable rally. I think in...
What would be a reasonable rally?
10%.
Okay.
I think in general people have to sort of get their minds around that the days of making 20 and 30% are sort of behind us. And the traditional amount of money you can make in a stock market anyway is somewhere between 6 and 10% real. I mean, and you can then work it back from that and work out what you'd get as a rally within a particular market. I think the second element is that you will not see eventually, at the beginning, you'll see the emerging markets rallying together with the correlation being close to 1, but at some stage it must begin to separate, because I think people will take country-specific risk into account. I mentioned...
Do you think that's already happening right now?
It's beginning to happen. I mean, for example, people are originally, most foreign investors tended to view China as the anchor to the emerging market story, because they took for granted the growth within China, and then that fed within the region, and that fed within the world. There is now questioning of the amount of growth. It's still there, but it's not as much as before. If you begin to see a credit crisis in China, people might look elsewhere for the anchor.
What is your overall view on India?
I think that, as I say, generally I'm more comfortable with India because it does have a democratic structure that gives stability. They will have to, like all democracies, balance what they can get through and what they can't, but some measure of reform is expected. Therefore, I'm quite happy. Incidentally, it's fascinating that there are several elections happening around the world in this very crucial year. You have the state elections in India, you have the People's Communist Party elections happening in China, which are equally important. You have the presidential elections coming up in the United States, and of course you have elections in Europe. I mean, this is a year for politics, not a year for economics.
And that would mean managing return expectations, because you can't, catch the cycle on the right side.
Absolutely right. You have to be careful because you're not sure what politicians will say or do.
Okay, what about the kind of money that you see coming into BRICS? Because last year we saw fund outflows of about $15 billion from BRIC funds. Will that reverse?
Not all of it. I don't see that. Simply because some of that was retail, and the retail investor in the developed world is hurt, and they need the money to spend. Some of that was allocation coming out because of the de-risking movement, and even though I argue that some of it will come back, you can't have all of it come back. So I think some of it will come back, but not all. Who knows? But that is why I'm saying to you, you will have a recovery, but it won't be the 25% equivalent of the drop that you've seen.
But would that mean enough for India to kind of get upgraded from neutral to perhaps an overweight, or is that too early?
I think that's too early. I think India will get upgraded to overweight when people start having question marks about China.
And then that happens?
Sometime towards the end of the year, and I'm putting my neck out.